I think any investor across the world is going to be watching that very closely. And the key thing here is really to see if there's going to be any further factory closures or extensions, because that's where you get the more significant economic impact coming from. But also on our agenda is going to be, there's a couple of ECB speakers this week, which is going to be close to watch, because ultimately, look, the coronavirus, it's going to have a temporary, a short-term impact. But for a longer-term perspective, we don't think that this is going to be a permanent shock.
We were just mentioning the political deadlock that we're now potentially facing in Ireland. Will investors be paying any attention to that?
Yeah, absolutely. I mean, this is very interesting because it's really changed the political landscape for Ireland. It's always almost been dominated by the two key parties, and Sinn Féin has been relegated. And what this means now is that markets are very unfamiliar with Sinn Féin policies, so that introduces an element of uncertainty to markets. And of course, the struggle to create a government now that the other two parties have already said that they are unwilling to work so closely with Sinn Féin.
Seema, it's Hadley out in Dubai. Thanks so much for joining us. I mean, given what we're seeing with coronavirus, given what we're seeing, frankly, in the global political uncertainty, whether you're sitting in Europe or in the United States as well, perhaps even in Beijing at this point, what looks attractive to you?
Well, I think the key thing is with the coronavirus is, one, you have to make sure that you're maintaining your longer-term structural views, because chasing short-term market movements can be very difficult, and you end up just kind of following the most previous move. So that's for us. We came into 2020, we liked Europe, we liked emerging Asia still. That's still our position, but we think that you can get in at better levels now. For specific countries within Europe, Germany is the most open. It has the closest trading links with China. So on the one side, it will be hurt the worst, probably, out of the European countries, but it also means that there's going to be a much better buying opportunity within a few weeks or so, most likely. And then the other two countries that will be affected will be France and Italy, because of the inbound tourism from China, and also the purchase of luxury goods from Chinese consumers. So these are two areas that we'll be watching to look if there's good buying opportunities.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.